by TBS Adrian and Fabio Natalucci of the International Monetary Fund assess the threat COVID-19 poses to global financial stability. The COVID-19 pandemic has caused an unprecedented human and health crisis. The measures necessary to contain the virus have triggered an economic downturn. At this point, there is great uncertainty about its severity and length. The latest Global Financial Stability Report shows that the financial system has already felt a dramatic impact, and a further intensification of the crisis could affect global financial stability. Since the pandemic's outbreak, prices of risk assets have fallen sharply. At the worst point of the recent sell-off, risk assets suffered half or more of the declines they experienced in 2008 and 2009. For example, many equity markets in economies large and small have endured decline of 30% or more at the trough. Credit spreads have jumped, especially for lower-rated firms. Signs of stress have also emerged in major short-term funding markets, including the global markets for US dollars. Volatility has spiked, in some cases to levels last seen during the global financial crisis, amid the uncertainty about the economic impact of the pandemic. With the spike in volatility, market liquidity has deteriorated significantly, including in markets traditionally seen as deep, like the US Treasury markets, contributing to abrupt asset price moves. To preserve the stability of the global financial system and support the global economy, central banks across the globe have been the first line of defense. First, they have significantly eased monetary policy by cutting policy rates in the case of advanced economies to historic lows. And half of the central banks in emerging markets have lower income countries have also cut policy rates. The effect of the rate cuts will be reinforced through the central bank's guidance about the future path of monetary policy and expanded asset purchase programs. Second, central banks have provided additional liquidity to the financial system, including through open market operations. Third, a number of central banks have agreed to enhance the provision of US dollar liquidity through swap line arrangements. And finally, central banks have reactivated programs used during the global financial crisis, as well as launched a range of new broad-based programs, including to purchase riskier assets such as corporate bonds, by effectively stepping in as buyers of last resort in these markets and helping contain upward pressures on the cost of credit. Central banks are ensuring that households and firms continue to have access to credit at an affordable price. To continue our economy and politics economics conversation and discourse today, we'll be looking at COVID-19, how the capital market can support the Nigerian economy. With me to lead this discussion is Mr. Patrick Ezeagu, President, Association of Stock Broking Houses of Nigeria, ASHON. Good morning, sir, and nice to have you, sir.
Good morning, and thank you for having me. And I'd like to state that the name of the association that I chair is Association of Security Dealing Houses of Nigeria.
Okay, well noted. Association of Security Dealing Houses of Nigeria. Nice to take that note, sir.
Thank you.
We acknowledge the efforts of ASHON in helping to grow, deepen, and ensure that our market remains liquid and vibrant amidst all the challenges. So let's begin with your experience so far, the lockdown and the easing of the lockdown. How has it been, sir?
Thank you very much. I think that I will start first of all by extending my sympathy to everyone who have been negatively affected by the COVID, especially those who are our health workers who are on the front line, and then being the people who are actually the people who suffer most in terms of the stress and the possibility of contacting the coronavirus. I really do sympathize with them, and then I sympathize too with all those who have made the untimely death because of COVID.
All right.
Then, to your question, I think that this is an unprecedented circumstance because it has impacted on virtually every facet of life. First, by quarantining everybody. Two, by ensuring that all the activities that human beings are naturally involved in are slowed down. And for Nigeria to be at a standstill for almost like 6 weeks, it's a lot in terms of what had happened to the economy, because people can't even feed themselves, and government's resources are very limited in terms of actually helping with the palliatives. So I can tell you that the lockdown have been a very terrible experience for most, if not all, Nigerians and the whole world economy.
Okay, well, to get your point, and thanks for that feedback. Now let's look at the assessment of the impact of COVID-19. You've said there's been a terrible experience, the lockdown, global economy, and Nigeria. But let's look at the impact of COVID-19 on the capital market in Nigeria. How's it been impacted?
I think that the greatest impact came from the degree of uncertainty that the COVID-19 brought into the economy. And you realize that the capital market is just a subsector of the total economy. And so if the oil glut had happened, then and the foreign exchange had spiked in terms of the real exchange rate between Naira and the dollar, then the capacity of industries to perform, and then the lack of patronage of the capital markets. Then you look at the impact in terms of the prices of the equities, and the EVs have been moving southwards all through because of lack of patronage, and then people who are exiting because of the uncertainty that's coming into the market. Then the whole thing has equally affected the organizational agility and resilience. And you realize that what actually will trade, which is securities, is on quoted companies. And if their capacity utilization has been affected negatively, you realize that eventually it will show up on the bottom line. And these are the things that investors will be looking at and saying, should we go this way or that way? And if naturally people savings come from disposable income, and disposable income have been terribly affected by the COVID-19, you realize that the aggregate savings have been lowered, and therefore that will be impact on investment. That means the available funds for investment have been greatly shortchanged. And so if you look at it, generally speaking, all aspects of the capital market have been affected. Then you come to the stockbroking community, which I belong to, you find out that actually, if not because we had over 5 years ago activated the MOS, it would have been difficult for the stock exchange as well as the other exchanges to be able to even do trading. And if you imagine what happened to the total economy if the stock exchange were not able to function for one single day at the ought to open. So everything had gone negative, but that doesn't mean that there are no positive impacts. But that will be a later discussion.
Okay,
I hear you very well in terms of the impact and the fact that the minimum operating standards set by your stakeholders have helped to navigate at this point the challenges at this period. But when we look at the performance in the market, we can see that, for example, published on ProShare, when we look at the foreign portfolio investment and domestic, we see that as at 31st of March 2020, total transactions at the nation's bourse increased by 63.58% from 148 billion naira, that's about $484 million in February 2020, to 242.91 billion naira, that's about $630.4 million in March 2020. This is compared to what we saw in March 2019, 110.11 billion naira. So transactions increased by 120.60%. That's in March 2020. So the total value of transactions executed by domestic investors outperformed transactions executed by foreign investors by 10%, as shown in the updates in terms of looking at performance of domestic and foreign portfolio investors. What's the reaction to this? And the IMF had released report that Nigeria should really watch out for the impact of low foreign portfolio investments this period of the COVID-19 disruptions. What would be your reactions to this, and how would this shape operations of the securities dealers?
Well, I started by letting you know that the MOS have really helped to ensure that at least there's continuity of business. And because every stockbroking house trades remotely, and all customers of stockbroking houses had equally been there to activate the processes that ensure that they themselves can access the stockbroking firms remotely. But talking specifically with respect to the way the market had performed vis-a-vis the previous year, you realize that what we have been advocating for is a situation whereby the Nigerians should be able to own their own investments, and rather than depend on foreign portfolio investors to be able to run their market. And what it has shown actually is that Nigerians do have confidence in their own economy, irrespective of whatever is happening out there. And that is why it is what is happening, because it started off even from the countries in diaspora, whereby their economy was severely affected by the COVID. And so naturally, what will happen? Even those who were in our brothers and sisters in diaspora immediately began to even access the market here. And this had helped equally to ensure that the market is sustained here. But more importantly is that all the domestic investors believe that this is where to go, especially with what has happened with the fixed income market, where found out that the rates had gone as low as about 4% and in that range. And so where do you find value? Where you find value actually is in the equities market, where you are sure at least that if you stay there and pick your stocks properly and run a good portfolio within there, that you are going to the returns will eventually outperform other markets. And so that is why people now moved into the equities market, and that boiled up the figures we are seeing.
Very interesting. So when we look at the operations, how has this really shaped for security dealing members, which you are a chairman of that association, interacting with your colleagues? How has the operations been shaped by this, and how would it now begin to help them strategize amidst future challenges that may come?
Naturally, when these kind of sudden happenstances occur, there are bound to be few resistances. But when the realities dawns on everybody, people will have to find a way of doing things. Like I told you, if we already had programmed ourselves with a business continuity plan that ensure that no matter whatever happens, people will be able to access both the stockbrokers as well as the stock exchanges, then what our members did was, first, we called on our members and told them this is the new reality, and therefore we need to approach it with caution, but steadily ensuring that we maintain our relationship with all our customers, to ensure that at least no person will suffer any deprivation because of what has happened. And because the system is well integrated between us, the CSCS, the stock exchanges, the registrars, and all those who are the capital market operators, it became a seamless operation. And all our members, for now, I have not had any serious reports of people not accessing the services of stockbrokers in the market. But going forward, digitization is the name of the game. Because already we are talking about the fourth industrial revolution, but it appears to me that the revolution had accelerated and come faster than we expected. And my attitude to it is that there are what I call the 3 Ds that I think that all stockbroking houses, and even the other companies who need to survive under this prevailing condition need to really begin with. And the first of it is the fact that we have to talk about digitization. That's the first D. And therefore, you have to ensure that at least you can trade from wherever you are, and even be able to enable your clients to be able to trade through you into the various exchanges. That's number one. Number two is that you'll be able to do all the e-filings that you need to, do to both the regulatory authorities as well as to the other members of the capital market community, like the CSCS, that is the CSDs, as well as the registrars. Number three is that you are going to go e-commerce. That is, everything you have to do, you have to ensure that you will be able to reach your clients via emails or any of the other channels that are virtual. So that you realize that the millennials, really, they don't really want to be coming to offices, if you ask me. They want to be wherever they are and then do business. So why do you have to want somebody to pass through the terminal bridge, go through all the hassles of the hold-up and all the insecurity that's involved just to come to transact with you, when he can sit at the comfort of his house and then you can discuss? After all, as we are sitting down here, I'm in my house and you are there in the office, and we're discussing effectively and consistently without any disruptions. So the world is changing, and therefore digitization must happen. And any organization that does not embrace digitization, then it is bound for extinction. There's no two about it. The other one is diversification. Diversification is key, because the way we are now, look at even Nigeria as a nation, we have been paying lip service to the issue of diversification of our economy, and we're paying dearly for it. Because we have had the mono product, and people have been mounting this aspect of the diversification. But coming to the capital market, we cannot rely on equities alone anymore. We have to move into other areas of business that have to do with both the fixed income, the commodities, and the derivatives, so that you have a bigger basket of securities to run with. So that if there's a shock in the system, you realize that it may not have the same kind of effect on all the asset classes with the same severity at the same time. So you'll be able to now resize and rebalance your portfolios and then move on. And so that your income streams too will be coming from different channels. And that is why it is important that we need to diversify our businesses. Then it's not only diversifying the business, we can even diversify our business models as well. And that brings about the issue of either mergers and acquisition, or bringing in additional resources, either in terms of technology or in terms of human capital, to be able to boost our capacity to serve the clients in this new age. The final one is of the D, is what I consider as deep thinking. Because this is the time for people to put up their thinking cap. The music has changed, and therefore the dance system must change. If people do not resort to deep thinking about this, what had happened, and then had a learning curve that remains positive, because the worst aspect of anything that will happen to humanity is a situation whereby they dwell on the negatives. They should be able to take the lessons and run with it. And my thought about is the fact that we should be able to begin to retool our ways of doing businesses. We need to think about, do we need this level of human capital? What kind of technology will help us to be able to meet with challenges of today? What else can we do in terms of collaboration rather than competition in order to build a bigger cake? Because I tell you, over 5 years ago, we have been running with the idea that we need to begin to look at beyond just the equities market. And that is why we decided on our own as the brokers under Action to float the Lagos Community and Futures Exchange as a commodity platform that will be running with the government initiative in terms of diversification in the agricultural subsector. Because if you have agri and all we do is to produce the raw materials and just sell them, then other people will go and process them and come back to us with a higher price and with some value addition. What have we done? We continue to remain at the primary and primordial level in terms of industrialization. So what we're saying is that we want to activate all the value chain within the agricultural level and see how we as within a platform to be able to enable people to be able to have a good price discovery and be able to have standardization that will meet international standards, so that people will now go through the exchange to be able to now assess products that people both at the rural area and along the food chain were able to bring on table. The same thing I think that actually who brought about the establishment of the FMDQ, in which case they have given a boost to the issue of the fixed income securities. And equally that the NSAD, which is the platform for OTC markets. And these are the ways you must think deep and begin to do things that will enable you to be able to be sustained over time. And that is very, very critical to this environment.
Yeah. I mean, you shared extensively
the strategies ahead, and I'm really impressed to hear about the diversification, the need for diversification from equities to other segments, which is very key. Digitization, which is very, very important at this time. And even looking at the fact that there's need for more collaboration, not being competitive. I think those are very, very laudable things that you're looking at. And with that, I can go on to ask, how is this going to begin to prepare you and your colleagues for the demutualization phase in the Nigeria Stock Exchange? I believe that COVID-19 would not adversely impact that plan. So this is very strategic for your phase and shift in terms of operations in the markets.
The demutualization has gone very, very well to date. You know that we started this by sensitization of the dealing member firms who actually own the exchange, along with the ordinary members who own the exchange, as to the need for us to demutualize, because that will free the organization from the trappings of the ownership structure and non-for-profit posturing that they had all the while, so that we'll be able to now be liberated and be able to access capital and do other things that ordinarily we won't be able to do. After that, we went in for the legislature to convince them that they need to do some tweaking of our legislative acts to ensure that at least we'll be able to do that. And when we got that, then we proceeded along to, first of all, sanitize the membership of the exchange. We did really an audit of it to be sure and establish those who are actually the members of the exchange. After which we now took all the necessary motions. And then after that, we continued on the engagements with all the stakeholders. But finally, we were able to get to a point where SEC was able to ask us to proceed with the actual process of demutualization. And if we remember, early in February, we were able to have the court ordered meeting as well as the EGM, at which we were able to now start the process in earnest. In fact, we are humble, my humble self, I'm honored and humbled by the fact that I was the person who moved the motion for the demutualization of the exchange. And were unanimously, carried by all the members present. So what when we are through with that now, we are in the process of documentation, which will require that we go to CAC to now register the new company, and then come back to the court for the court sanction, and then to the CAC, to SEC for the final approval before the shares will now be credited. Currently, the registers to the NSC is calling on all members to update their data so that by the time we're through with this, people's stock will be credited to them electronically. And that's what I'm talking about, the fact that we're already going e-commerce in the way we're thinking. And so those processes are there, and I believe that I don't think that anything will stop it, except that small delays because the costs are not sitting. But now that they have started with their e-sitting, that's virtual sitting, maybe we'll be able to take advantage of that and then complete that processes. Then coming to our members, while we were on this process, we have been having a series of meetings with our members, updating them on what has been happening. But more importantly, encourage them to understand that the business model needs to change, because we're not going to transmit from being members of the exchange to becoming shareholders of the exchange. But I can tell you that there are some value that will accrue to members, which will help them in terms of capital to be able to remodel their business in a manner that will now be in tune with what the exchange is thinking about. And so our members have been sensitized. We have had some seminars as to the kind of future that the exchange holds for everybody, and the fact that we need to be prepared for the way we're going to run as shareholders rather than members of the exchange, in which case we will now be regarded as clients to the exchange. And so if you're a client, everything is for profit. And so the charges, the relationships, all this will be done on an arm's length basis, because you are not a client. You only wait for the day you are going to go to the AGM, and then maybe be able to question those who hold fiduciary responsibility over the exchange for you. And then we'll be saying, how much have we made? How much is coming to me as a dividend and all that. So our members are constantly being sensitized, are constantly being retrained to ensure that they fit into the new normal.
Okay,
that's also quite interesting to hear, the new normal. But in a few minutes, could you share with us how your capital market community is working to support the economic sustainability of Nigeria post-COVID-19? We've seen efforts like a 1 billion naira effort from the capital market community. But we're hearing analysts saying that they also need to explore areas like pandemic bonds, developmental bonds that can really be for long-term, 10-year, 20-year tenure, that people can key into and investors can key into to really chart a pathway of investing into Nigeria's development and future.
I think that number one is that I want to appreciate the Security and Exchange Commission for, first of all, rallying the market to the point where we have all agreed to, first of all, support the government in this fight for this pandemic. And I happen to be a member of the committee for the 1 billion naira COVID fund in support. And first of all, I think that is in terms of the palliative that can go to the market. But in terms of the way the market can help to, in terms of sustainability going forward, and in terms of revitalizing this economy, the capital market has a lot to do. And like you mentioned, first, let me rewind. If government that had decided that they were going to borrow just about 744.9 billion naira from the local capital market, had now suddenly changed and added another 850 billion. That's about 1.56 trillion that is going to come into this market. And if there's no market in the first place, which is the domestic market, where would they go? There's no place to run to. And so already the market have given confidence, because the signal impact of that statement is enough to show the rest of the world and even the Nigerians, give them confidence that there's hope and that something is going to come out of it. That is number one. Number two is, what then do we do? First, we need to prepare ourselves to be able to ensure that we're able to meet up with the demand of government. Because that's one of the greatest people who really spend a lot of money. And if the capital market cannot meet up with that 1.56 trillion, it means that the budget will suffer, and that will be a terrible setback for the economy. And so we first of all have to sit back and ensure that we are in a position to meet that gap. Then going down, down the line, it is obvious that we need to support with some social bonds to be able to help, especially with the SMEs, which are the real people that have been battered by this development. So it is obvious that we need to go into several kinds of bonds using the model of the ethical bonds we have in terms of the green bond and Cook and the rest of them, and then begin to develop models that will fit into the social bond, model, so that we can use that. And I believe that with the way the interest rates have been, the yield curve have been a bit, uncomfortable for many investors. I think that if they are targeted at specific projects that people can, see through and then be sure of how it can regenerate itself, it's going to be a wonderful, area that capital market have to buy into and see what it can do to ensure that these people begin to feel the impact of the capital market in terms of helping to sustain the economy as it were.
All right.
I want to thank you very much, Mr. Patrick Ezeagu, Chairman, Association of Securities Dealing Houses of Nigeria, for sharing your thoughts on how you're going to strategize operations, how the mutualization of the Nigerian Stock Exchange is going to shape your activities, and also how the capital market can support the Nigerian economy post-COVID-19. Thank you very much, sir, for your insight.
My pleasure.
Thank you. And that was Mr. Patrick Ezeagu, the chairman of the Association of Securities Dealing Houses of Nigeria, sharing his thoughts on how the capital market can support Nigeria's economy post-COVID-19. We'll continue our conversation by 10 a.m. on the market review, but you can join our website, www.proshareng.com, to get further updates on our news stories, reports, and videos. Till that time, just stay blessed, and we'll see you.